Good day everyone, this is your European Open Briefing for Wednesday, September 21st. I'm Rafi Boyajian, currency analyst at xm.com, and we're going to be looking at what's happening in the currency markets today. Now, the main news out of the Asian session today was, of course, the Bank of Japan's announcement. The Bank of Japan today announced a policy framework overhaul whereby they will now be targeting long-term interest rates by adopting yield curve control as opposed to having a fixed target of expanding the monetary base. The yen fell after the Bank of Japan's decision, and we had some other data out of Japan prior to the announcement. Specifically, we had some trade data where exports continue to decline in August. The only other main mover today was crude oil. We saw another big jump in crude oil prices yesterday on the back of another drawdown in US crude stocks. And of course, the main news later in the day will be the FOMC statement by the Fed, and the Fed's announcement will be followed by a conference by Fed Chair Janet Yellen. Now, going back to the Bank of Japan, the bank today introduced qualitative and quantitative easing with yield curve control. So this means that they will now aim to keep 10-year government bond yields at around 0% by purchasing government bonds. The bank said that they will continue purchasing the government bonds at more or less in line with the current pace of 80 trillion yen annually. So they're no longer targeting a fixed size of asset purchases. So they're now adopting a more flexible approach whereby the size may vary depending on the formation of the yield curve. There was a surprise, however, when the bank said that it is committing itself to expanding monetary base until annual inflation exceeds the 2% target. So this is a looser definition of their 2% target level. They will now be aiming to let inflation rise above the 2% target as long as it stays in a stable manner above the 2% level. They will not try to tighten policy if it exceeds 2% target by a small margin. There was some disappointment though when the bank said they're going to keep negative interest rates at minus 0.1%. There have been speculation that the bank might have cut rates deeper into negative territory. Now let's have a look at the impact on the currency markets. The yen fell against all other major currencies after the announcement. We saw the dollar jump up to 102.78 yen, but the yen did pare its losses after once the Bank of Japan Governor Kuroda started his press conference. We saw the dollar fall back to around 102 yen, just around at the open of the European trading. In the Bank of Japan press conference, Kuroda reiterated that monetary easing has not reached its limits. He tried to explain why they adopted yield curve control. He said that this should help prevent damage to market sentiment due to the negative impact of negative yields on the financial sector. He also defended the Bank of Japan policies, saying that inflation would have risen to the 2% target already if it wasn't for the oil price drop, as well as the slowdown we've seen in emerging markets over the past year. Kuroda did, however, keep open the possibility that they could cut rates deeper into negative territory in the future. Now, looking at the data that we saw out of Japan today, exports fell for the 11th consecutive month. They were down 9.6% in August compared to a year ago. Market forecasts were for a smaller decline of just 4.8%. Imports were also down sharply by 78.3% year on year in August. And basically, this does not bode well for third quarter GDP growth for Japan. And this, if the growth once again disappoints for the third quarter, this will likely put more pressure on the Bank of Japan to take further action. The other major mover of the day is crude oil. Crude oil prices rose sharply yesterday after the data from the American Petroleum Institute. US crude stocks fell by 7.5 million in the week ending September 16 versus forecasts of a build of 3.4 million. This was the third weekly drawdown in US crude stocks, and so the focus now is on the EIA data from the US Energy Department, and if the EIA data also shows another drawdown, this will probably help crude oil make further gains. Just before the European Open, crude oil, US oil was trading just below $45 a barrel. Now, coming up later in the day, we have, of course, the Federal Reserve's announcement. They are due to announce their latest decision at 18 hours GMT. Majority of economists are not expecting any move by the Fed today, despite some conflicting messages from Fed policymakers, where some officials have sounded dovish, whereas others have sounded more hawkish. But the consensus is that the Fed will stay on hold, especially given that the US elections are coming up in November. There will be markets will be scrutinizing, however, the Fed's statement and the Fed Chair Janet Yellen's press conference for any signs of a December rate hike. And the Fed will, of course, publish its latest dot plot of the FOMC forecast of the longer-term interest rates in the US. So if the Fed lowers its forecasts of the interest rates, long-term interest rates in the US, and this could pull down, put pressure on the dollar. Now, in terms of data, the only other major data coming up is UK government borrowing data. But pretty much market focus will be on the Fed. The FOMC statement is due at 18 hours GMT, and Janet Yellen's press conference 30 minutes after that. That's it from me today. Thank you very much for watching, and have a great day.